Well, markets are set to close lower today after the S&P hit an all-time high yesterday. We had higher jobless claims, and now all eyes are to the monthly jobs report tomorrow. Now we're joined by Jonathan Corpina. Jonathan, we did open high today but quickly moved lower. Was that simply investors unwilling to buy at all-time highs when economic data is still a bit mixed?
I think it's a combination of that, and it's also a combination of the calendar, right? We've got the unemployment number coming out tomorrow, and it just seems that investors don't know how to read the numbers, can't get a good feel of it. Whether the numbers are good or bad, you don't know how the market's really going to react to it. So what we do see ahead of time, especially with the market trading at highs, is some short-term profits coming off the table, investors locking those in, and then they're going to wait to see how the market reacts to the number tomorrow.
So if we do get a poor result tomorrow, to what extent is that likely to be forgiven and blamed on bad weather, or as you say, maybe they'll see it as a good thing because the Fed might keep stimulus in place for longer?
Right. So it's the cause and effect, right? If we get a poor number in the jobs number tomorrow, it's going to lead one camp to believe that, all right, well, tapering isn't working as well, and we're going to have to elongate this process and see how this is going to work itself out. Yes, we might hear a little bit about the weather. This might be the last time they can throw that weather excuse in there, as weather is starting to get nicer, so they might hang their hat on that one for one last time. But I do think it's going to come down to tapering and how tapering has affected our economy and how will it affect it moving forward.
Okay. Now, speaking of stimulus, the ECB did hold off overnight, but this month we may get some more stimulus from the Bank of Japan, maybe China. Would that be, I'm guessing that would be very positive for US shares if we did see that?
I think so. It's a waiting game that's going on to see how long you can hold out before enacting as a stimulus into the economy. So they're waiting to see exactly when that right time is going to be, and we can debate whether there's ever a right time or not. But yes, in fact, it is going to be viewed as a positive, because if you look at how it's affected and helped the U.S. economy at this point right now, our job numbers, our retail numbers, housing numbers have all gotten better. As you said, we've reached highs in the markets. So the stimulus has helped in ways. It's not really that's the question. It's how the economy is going to react when the stimulus completely stops. So overall effect, it would have a positive effect on our markets.
Okay, thank you, Jonathan. That was Jonathan Corpina of Meridian Equity Partners, and I'm Jane Searle for The Street.